In terms of your fund, I know you're a specialized bullion fund.
Yeah.
Do you focus more on bullion or more on the other related investments in the bullion side?
We always have a bedrock of our fund is 75% in allocated gold, which in our case is stored in a private bank in Zurich, the oldest private bank. We didn't want to have a paper asset, obviously, as a gold fund. We then create, that is the bedrock of our fund. It allows us to create a structure of being able to be over-allocated and under-allocated through some other financial instruments.
Yeah.
And we try and create an absolute return above the gold price, and that's how we benchmark. We do actually...
And you have achieved that.
Yeah, that's very kind of you to bring up. We have achieved 17, 18% annualized above the gold price. And, we're very proud of that. And we feel that... in our own way, that our fund is about integrity, and we've helped a lot of people get out of paper assets and into an asset that's created a return. I know from my own personal account that my run rate's 10% a year in terms of inflation. It's rising at that amount. So I need to create a return for myself at least at 20% in nominal terms, because I've got to take tax
just to keep up.
Just to keep going. I did ask this of someone who's going to be at the conference today. I said, obviously you're probably very excited about gold being higher, but are you an advocate of a gold standard, or are you just excited about feeling like you're better off? Because clearly at the moment there are people who've owned gold and silver, and particularly silver, at $6 and watched it up to $50. That's real wealth accumulation, but actually they are still a long way behind the inflation destruction that we've had over the last 40 years. So in the short term, although they feel fantastic, actually all you've done is sort of started to catch up to where we should have been before.
But there's another important message there. You're basically saying that gold and silver are still undervalued, as well as they've done over the past several years. If you look at it over 30, 40, 50-year period, they're still undervalued by the historic metrics.
Yeah, it actually comes back to what we were talking about earlier, wasn't it? Price and value.
Exactly.
And value, and people say, how do you measure the worth of an ounce of gold? And at this point, because the system's inverted the other way and everything's predicated off a dollar or a sterling, but actually historically it was off a weight of gold or silver. Now we look at it and say, hang on, gold only backs the US monetary base 17, 18%, maybe it's a bit higher now, but just to go back to the average over a gold standard period where banks were capitalized with gold 40, 50%, that takes us north of $4,500, $5,000 for a fair value.
Yeah. Would you care to venture how far this bull market has to run, not in terms of price, but in terms of time? Are we talking about 3 years, 5 years, 3 months, 5 months? What's your guess?
Well, one thing I'm speaking, as you know, at the GATA tomorrow, and give a little snippet away. I talked about something called Benford's law, which is a power law, an exponential logarithmic function whereby that effectively, if you take something like a data series and it doesn't follow a uniform distribution, it actually, the lower digits, 1, 2, 3, you get a population of price or occurrence. You probably get 60% at 1, 2, and 3, and then as you move from 4 to 9, there's less population there. Well, we spend a lot of time between 1100 and 1400. I say a lot of time, it's actually only a year and a half, based on this probability assumption. Moving from 1400 to 2100, we should do in 10 months, which means that we should hit 2100 by January. I hope that anyone who didn't understand that, just go and read my speech when it's up on our website. But so for a bit of fun, I think that we're going to see a bit of an exponential move here that takes us to 2100, and I'm not going to venture any more than that. I've said on a basis of monetary valuation and the rate that we've already accumulated reserves in the world, we should be at 4,500. And one last thing I would like to offer is that there's so much leverage in the system. In some ways, I actually feel sorry for Ben Bernanke. I actually believe that in his intellectual mindset, that he understands this situation. He understands full well what gold means to the world. He understands we've got so much leverage, he's just got to let the air out of it very gently, and he's trying to do that manfully, working within a system that he understands. And I'd offer him that.
But at the end of the day, I'd rather own gold than U.S. dollars.
Absolutely. And I think people say, or inflation or deflation, I think
it doesn't matter if you own gold.
Absolutely. I think that I'd be absolutely ecstatic if other assets were to go down in price, just being a bit mercenary about it, because I believe that my purchasing power will increase dramatically. When I sell my gold, I won't get charged taxes on it, and I'll be able to pick up some nice cheap assets.
The other thing I would say is that instead of selling gold, when this bull market is over, you're going to spend your gold. I really do believe it's going to become currency once again.
I would like
time will tell.
I would like that opportunity, and obviously Gold Money's been a fantastic advocate of
Well,
that.
thank you very much. Very kind of you to say that. Well, Ben, it's been a real pleasure. Been speaking with Ben Davies, co-founder of Hind Capital here in London, England. Thanks very much.
Yeah, great. It's been an honour. Thank you very much.